So if you've been following the AI boom, you know the biggest infrastructure story is NVIDIA. I mean, their rise has been just staggering.
Oh, absolutely.
We're talking a market cap of $4.6 trillion, dollars, up almost 13-fold since the end of 2022. But if you're only focused on the chipmaker, you're missing the huge physical reality that's being built underneath it all.
That's the key distinction, isn't it? We have to look past the GPU. We have to examine, the nervous system and the storage needed to actually use all that power.
Right.
And the scale we're talking about is just, it's unprecedented. Look at the spending. You've got four major tech companies, and they're projecting a collective spend of $380 billion.
Billion.
Billion on data centers and infrastructure. And that's just this year. That figure is only expected to climb.
Okay, let's unpack this. Because when you follow that money, you find this counter narrative that's genuinely surprising. In 2025, a whole bunch of data center
The
stocks.
plumbing, basically.
Exactly, the plumbing, the makers of the connectivity, the memory, the storage. They had steeper rallies than even the chip leader. So our mission today is to dig into the 5 companies that have more than tripled and explain the vital roles they're playing.
We're moving from the brain, the GPU, to the physical foundation. Without the fiber optics, the advanced memory, without that, the cutting-edge processor is instantly bottlenecked.
Let's start with that nervous system then, the connections. First up is Lumentum. Their stock has been on an incredible tear this year,
Hmm.
up 372%, pushing their market cap over $28 billion.
And that rocket-like rise is because they're solving one of AI's biggest physical challenges, connectivity inside the data center. Lumentum makes switches, transceivers, and these optical laser-based parts for fiber optic cables.
Now, a lot of listeners might remember Lumentum from Apple's Face ID sensors a few years ago.
Right, that was their big thing for a while.
But that business is now, I mean, it's completely dwarfed by this AI build out. So what are their components actually doing inside these massive AI clusters?
It all comes down to the physics of moving data really, really fast.
Okay.
So when you need to connect, say, hundreds of GPUs together in a rack, traditional copper wiring just fisha. It can't keep up. At the speeds you need for training these huge models, copper generates too much heat, the signal degrades.
So the whole data center floor will basically turn into a giant, very expensive radiator.
Precisely. Lumentum's optical transceivers take those electrical pulses from the GPU and turn them into light signals.
And light is just faster and more efficient.
Way more efficient. Light travels down fiber optic cables so every GPU can talk to every other GPU instantly, across the rack,
Yeah.
across the whole data center. Without that, you just can't scale AI clusters physically.
And the numbers really back this up. Lumentum CEO said that 60% of their sales now come directly from cloud and AI infrastructure. Sales surged 58% in the last quarter. That's a total business model reorientation.
It's a phenomenal performance.
Yeah.
But let's look at what the analysts are saying, because this is where the hype meets, reality.
Right.
Revenue is projected to jump 58% this fiscal year. But then, analysts see a steep drop-off. It slows to 32% growth, then down to 15%.
So the street is already pricing in a sharp deceleration once this initial build-out is done.
Exactly. The initial rush is huge, but what happens next?
That does set a very high bar. Okay, now let's look at another piece of the networking puzzle. Celestica. Their stock is up more than 230%. They make the really sophisticated switches that manage all this network traffic.
Celestica has this crucial position because they're embedded with the biggest AI buyers, the hyperscalers. They support high-performance networking and the custom AI chips, the ASICs.
Okay, let's pause there because that's a really critical insight. The whole GPU boom is built on flexibility, right? But Celestica is heavily involved with custom chips, ASICs. Doesn't leaning into that introduce a massive long-term vendor lock-in risk for these big companies?
That's a fantastic question. And it highlights the big strategic tension in AI infrastructure. GPUs give you flexibility for sure,
Yeah.
but ASICs, they give you brute force efficiency and cost reduction when you're working at scale.
I see.
So for a company like Google, with their custom TPUs, they're running predictable, repetitive jobs. The efficiency gain is enormous. And Goldman Sachs noted that Celestica actually supplies parts for Google's TPU rack solutions.
So it's the difference between building, say, a multi-purpose SUV versus a specialized race car.
That's a perfect analogy.
The race car is way faster and cheaper to run on the track, but you can't, go pick up groceries with it.
Exactly. And you see it in Celestica's financials. Sales rose 28%. But what's really unique here, compared to Lumentum, is analysts expect their growth to accelerate.
Accelerate.
Yeah, from 26% this year up to 33% in 2026, and then 34% in 2027. So the market believes this move to custom optimized chips is a long-term trend.
And innovation is driving new demand too. The source material mentioned a hyperscaler approached them to build parts for liquid-cooled computers.
Right, with mass production next year. That's the future right there. Moving from air cooling to much denser liquid-cooled setups.
So we've established how the data moves. But all that connectivity is useless without the actual data to process. Data is the fuel, which brings us to part two, memory and storage.
Yeah, data is absolutely the foundation, and its scale demands a revolution in memory.
Let's talk about Micron. They're one of the big three memory producers and the only one based in the US. Their stock is up 241% this year.
Micron is riding this radical shift in what memory is needed for. The newest large language models are so enormous they require huge amounts of memory just to hold the model parameters right next to the processor.
And this has created a shortage.
A worldwide critical shortage of what's called high bandwidth memory, or HBM.
Okay, HBM sounds like a fancy name for faster RAM. What's the actual technical difference? Why is it so scarce?
It's not just speed, it's the physical architecture.
Mhm.
HBM involves vertically stacking multiple memory chips. Imagine like tiny silicon pancakes.
Huh.
And they connect them directly to the GPU with thousands of tiny connectors. This proximity, this huge number of channels, it just dramatically cuts down on latency.
The lag.
The lag. Latency is the enemy of AI training, and HBM delivers that. But that vertical stacking is incredibly complex to manufacture, which is why production is so limited. NVIDIA and AMD are basically absorbing all the available supply.
And Micron's response has been pretty aggressive. They blew away Wall Street estimates. Morgan Stanley analysts even called it the best revenue and profit upside in the history of US semis.
Outside of NVIDIA.
Outside of NVIDIA, yeah. I mean, you can't get a stronger endorsement than that.
And the scarcity forced some really tough choices. Micron's business chief confirmed they were more than sold out. And get this, they shuttered their consumer-focused line in December just to save that supply for AI customers.
Wow. So they're abandoning everyday consumers to feed the AI beast
It shows you where the priority is.
and where the money is.
But again, here come the future expectations. Revenue is expected to almost double this year, but then growth slows dramatically to 24% the next year and then drops to less than 1% the year after that. It's a classic boom and bust projection. Even if the bust is just, a return to normal. It's the ultimate reflection of front-loaded investment.
Okay, so let's move to the physical storage of all that data. We're talking about Western Digital up almost 300% and Seagate up 231%. You can have all the GPUs and HBM in the world, but they're useless if you can't store the fuel.
So what for storage is exactly that. As one CEO said, data is the fuel that powers AI. And while solid-state drives are fast, the old spinning hard disk drives, HDDs, offer the most reliable and cost-effective solution for storing petabytes of data.
Cost really matters at that scale.
It's everything. Western Digital had a great example, a hospital using AI to analyze 7 billion images.
7 billion.
Yeah. When you're dealing with that volume of archived data, the cost per terabyte of a hard drive is just unbeatable. And this massive appetite means both companies are now focused on selling larger, more expensive drives for data centers. Seagate said 80% of its sales now go to that market.
And this demand is actually changing the business model, right? The relationship with the hyperscalers.
It is. The source material points out that customers are now signing build-to-order contracts. They're committing to firm volume and firm prices. It's a strategic lock-in of supply.
That must provide a ton of stability.
It does, for both sides. The hyperscaler gets a guaranteed supply at a known cost, and the storage company gets the revenue certainty it needs to invest in new manufacturing lines.
And looking at the trajectory, Western Digital's revenue raised 27%, with projected growth of 23% in 2026, slowing to 13%.
And it's a similar story for Seagate.
Right. Sales up 21%, with growth slowing from 21% this year down to 15%, and then 6%. The pattern is it's completely consistent. Immense front-loaded growth, then analysts project a rapid return to normal. Okay, so we've established the spectacular financial reality and the intense physical demands of this build-out. But this entire globally interconnected supply chain, it all runs on capital. And capital requires certainty. That brings us to the strategic risk.
Here's where it gets really interesting.
The role of global politics.
This is where the long-term planning of every company we just talked about, Lumentum, Micron, it becomes completely linked to political stability. And this all centers on a finding from the U.S. Trade Representative, the USTR.
And their official finding was that China is engaging in unfair trade practices and using increasingly aggressive and sweeping non-market policies to try and dominate the semiconductor industry.
And that finding is what provides the official justification for policy action.
So after that, the Trump administration announced a decision on tariffs on Chinese semiconductor imports. But the immediate action was a delay.
Right, but the timeline is the most crucial part for anyone managing a supply chain.
So tell us about that timeline. What clarity did it provide?
The initial tariff rate is going to be 0 for 18 months. So that's an immediate cooling of trade tensions. But, and this is a big boon, the USTR filing specifies that tariffs will increase on June 23rd, 2027.
Okay.
And the specific rate will be decided just 1 month before that.
That delay is fascinating. It really signals that the administration's probably using those future tariffs as a kind of bargaining chip rather than imposing immediate pain on American companies right now.
Exactly. For the firms we've been discussing, this decision provides crucial clarity. They know their cost structure is stable for the next year and a half.
And that clarity is so vital when you look at the investment pattern. They're pouring hundreds of billions into these buildouts, signing multi-year contracts. They need to project their costs out, and now they have a firm date, June 2027, when that certainty runs out.
It forces a very aggressive, very short-term strategy.
Yeah.
They have an 18-month window to lock in costs and build out infrastructure without the headache of new tariffs. It's essentially a policy deadline that lines up almost perfectly with the market slowdown that analysts are already projecting.
So what does this all mean if we synthesize this deep dive? The explosive AI infrastructure build-out was the real market story of 2025. It created spectacular returns in optics, networking, memory, all of it.
For sure. The physical demands of AI, connecting every single GPU, moving all that data,
Yeah.
it created winners far beyond the main chip vendors.
The overall takeaway, though, seems to be that while the boom is real, investors need to be really careful.
Oh, absolutely. Lofty expectations have been built into these stock prices, and analysts are projecting a dramatic slowdown for many of these components after 2026 or 2027.
The demand is peaking early in the cycle,
That's right.
which leaves us with a final thought for you to mull over. We've seen that AI demand is so intense, it's forcing companies like Micron to abandon consumer lines. It's pushing Seagate and Western Digital into long-term contracts. The stability of this massive build-out depends on long-term certainty. But that looming 2027 tariff deadline, which was delayed to provide clarity, it directly impacts that stability. So the question is, will American companies be able to finish their cost-effective scaling before their grace period runs out and their growth slows down? The clock is ticking on both the market cycle and the political timeline, something to think about as you watch these infrastructure plays mature.